had a client tell me, I've bought a home, I've owned a home, I've made a mortgage payment before. No one's ever explained to me how escrows work. Thank you so much for doing that. Just taking a little bit of extra time leads to, a little bit less confusion for the client.
Morning, everyone, and welcome to this episode of the Real Producers Partners Podcast. I'm your host, David Owen with Change Cape Web. In each episode of the podcast, we interview partners to learn more about them and their business. Today, I'm joined by Pat Gannon from Rate.com. I'm excited to learn more about him and what they do and the value they bring to the marketplace. Welcome, Pat.
Hey, great to be here, David. Thanks for having me.
So before we get started, what's the best way people can use to reach you? How do you like to be contacted?
I mean, whatever's convenient for them. I mean, mostly on the cell phone. I've always got that. If I'm answering that phone or responding to text if I'm not sleeping. So that's 443-336-1248. Can email me. It's pat.gannon, my last name, at rate.com. So any of those ways is a great way to reach me.
Yeah, it's amazing. The cell phone is kind of attached to your hip, right?
Absolutely.
So tell me, how did you get started in the mortgage industry?
So let's see. So I graduated college. I went to Elon University in North Carolina. I graduated in 96, and I really was unsure what I wanted to do. I think I got out of school. I wanted to be on Sports Center, like a host on Sports Center, things like that. And I haven't given up hope on that one yet, but I kind of bounced around. I was in the IT world, it just was something that I was not entirely interested in. And I was in sales, and I was selling to IT directors who knew a whole heck of a lot more about what I was talking about than them. So my friend was at a mortgage company. This was 1999, and said, "Hey, you should try this." And I said, "What the heck? Let me give it a shot." Yep. And I think within the first 2 days, I realized that I was in a place where I was comfortable. Always kind of been good at math and that part of it. And I just loved the ability to kind of help people, and clients were happy with, they either bought a home or refinanced, were saving money or taking cash out. So anything like that ended up being a really good fit for me from the beginning.
Yeah. For many people, getting a mortgage can be exciting or it can be scary.
Yeah, absolutely.
So you have to play those range of emotions.
Absolutely. Yeah, no, it's, I think I always talk about it. Even people that have bought and sold a lot of homes, they're still probably doing it 6 or 7 times in their life. So even those, it can be an ordeal. So shepherding through that is a huge thing.
So what sets you guys apart in the marketplace?
I would say what really separates us from other lenders out there is we really have a unwavering commitment to transparency, education, and personalized service. We kind of were just talking about it in an industry where it can feel very overwhelming. We deal a lot with first-time home buyers,
right?
But like I said, people don't do this every day, so lots of numbers can be very confusing. We really make it our mission to ensure every client fully understands their options. And that doesn't just count as interest rates, but also the total cost of doing a mortgage, including APR, fees, and the long-term implications of things. I think it's really important too. There's not a one-size-fits-all approach. Everyone's different. Every client situation is unique. So what I really try to take when I have that initial consultation, take the time to listen. Listen. And I don't think we all listen enough. So listening, and then that really helps me figure out the right questions to ask. And that way I'm able to tailor the solutions to fit their goals and financial circumstances. Mm-hmm. And then I think Rate's really well known for our technology. I really think we're second to none in technology. And that technology really does streamline the process. But it's the human touch, I believe, with myself and my team, it's clear communication. Accessibility. I mean, I advertise myself as being available 24/7, 365. Now, we all know that's a little hyperbole. Probably you're not getting me at 2 a.m., but we truly are accessible. And at the end of the day, everyone on my team genuinely cares about making, and that really, I think, makes a difference. Ultimately, my clients, they're not just getting a mortgage, they're gaining me as a trusted advisor. I talk about with them at the end of the process that I'm their advocate for life. Now they work with me. So I'm available after the process, because oftentimes that's even a more important time if they've got questions that come up, and they always know that I'm keeping an eye on for them for an opportunity to better their mortgage situation as well.
Okay, so if the rate changes in the market and there's an opportunity to refinance, you reach out to them?
Absolutely. That's what I always talk about is in the very beginning, as we're going over the final numbers for closing when they purchase a home, I tell them when we're going over those numbers, there's already a plan in place to refinance you, as I say, when rates cooperate. That's the term I use in those situations. So yeah, we have a pretty sophisticated automated system, so I don't have to remember everything. I'm alerted when we're in range, and we can take advantage of those rates when they cooperate.
That's a great comment, though, when rates cooperate.
Yeah, I think that's, and people kind of chuckle about that over the last 3 years. We've seen mortgage rates, although they're historically really in line where they've been historically. We went through a very low rate environment during the COVID timeframe, lowest of all time. So, it took some getting used to for a lot of folks, over these last few years.
Yeah, I went through several iterations of rate change when I bought my house, and I monitored the rates myself because the mortgage company didn't call me back.
Yeah.
So I monitored them, and I reached out and initiated the refinance capability.
Yeah, and that's something, on my end of things, I don't want to have happen. Right. I want to make sure that I'm staying in touch with my clients so that they don't forget me. They usually have an amazing experience when they purchase the home, but people forget, and it out of sight, out of mind. So we definitely stay in front of in all ways that we can communicate with clients, including I do the old fashioned. I pick up the phone, I call every 6 or 12 months just to check in, even if I don't have something for them. I want to find out what's going on because things change or questions come up. So we try to stay in front of them, and so that we'll be ready to help them.
So I didn't ask you this, and we haven't discussed it, but where are you specifically located?
Yeah. So I'm in the I'd say my main area is in the Annapolis area, Annapolis, Maryland. Okay. But I really, the company's licensed in all 50 states, but I would say I'm primarily in the DMV. So for those that don't know what that means, that's DC, Maryland, Virginia.
Okay.
But I would say that probably a majority of my client base comes in Maryland, where I'm located. Okay. But I can help in all 50 states.
Oh, good. Okay. So what's a misconception that's in the marketplace about your business, about getting a mortgage?
Yeah. I think as far as qualifying for a mortgage, it can be,
right.
Particularly, I think folks that, maybe are first time home buyers, is the idea of that they may not be ready. They think they're, just not ready for whatever reason. And we talk about the idea when I have someone that reaches out to me and says, Pat, is it even worth doing this? I don't think I want to buy for a year. And I always say, hey, listen, we should be talking now. That's great. And we're going to stick to your timeline, and we're going to have it ready. What I hate to see is when I have the client that plans everything around the idea of when they think they're going to be ready. And then when the time comes, they find out that they're not ready, and they could have been doing things leading up to that that would have helped. And then I think there's one of the areas where I can really help clients that are in that situation is understanding how credit works. Certainly, I've been doing it, as I mentioned, 26 years here. So definitely consider myself a credit expert. I know what makes credit scores go up and what makes credit scores go down. Yeah. And oftentimes I find that clients who aren't as familiar make mistakes. I joke that they use common sense, And oftentimes using common sense isn't the best approach on how to improve your credit score. As an example, someone that has credit card debt maybe pays it down, which obviously that's a good thing.
Right.
But then once they get to the zero balance, they're really happy about it. And then they close out that account. That is the worst thing that you can do. But I say, it's like common sense. I want to cut that card up. I want to close it. I'm done with that. I'm going to do the responsible thing, but that isn't the right thing to do if you want your credit score to be at the highest point possible. So things like that, I think, is maybe sometimes that's a credit misconception for sure.
Do you ever get people come to you that say, I have no money to put down?
Absolutely. Yeah.
And how do you handle that?
Yeah. So that's an interesting conversation. So, we have programs. We have down payment assistance programs. We have some grant programs that help those clients, that don't have any cash. Now, there are programs out there that don't require any down payment. VA mortgages for veterans, active duty and veterans require no money down. If they're looking in a rural area, USDA allows for no money down. So there are some mortgage programs that help with that. But yeah, I mean, the no money down, not having any money is something that we can overcome. But I think I do kind of talk about programs, but I also talk about reality, right? In this market, particularly in the DC area, it's a very competitive market. We're seeing a little bit of a lull, like I think we are seeing nationwide in certain cases, but that's not in every scenario. And I talk about the idea that, yes, we do have a no down payment options, but oftentimes you're going to be making offers, particularly first time home buyers, in a competitive situation. That's where the most competition is, quite frankly, in that first time home buyer price point. And if you're submitting offers with no money down options that are clearly down payment assistance, you might be a little bit less competitive against your competitor. So we talk about other ways that maybe they could uncover money. Could a family member help with a gift? Right. Do you have access to any retirement accounts? Is there a 401k loan that could be used for down payment? Because oftentimes it's also not only will make you more competitive, but it's also going to get you better terms. I was just having a conversation with a colleague today. Nothing's free in life. So most of these down payment assistance programs get paid for somehow, and it's usually by the client and the interest rate they get, in some manner like that. Yeah.
So it is always good to have the more money down you can find, if you can find money, because the interest rate over time will be less.
Yeah, I think so. And I also even sometimes I'll have a client that maybe has enough money for the down payment, but not closing costs, or they may have money for the closing costs, but in an area where they don't really want to access it. And I talked to him, I said, listen, that's a great game plan. We can maybe go in and make an offer on a house with your agent's assistant, your real estate agent's assistance, where we'll ask the seller to help with some of the closing. But as I mentioned before, David, I mean, it can be a very competitive market out there. And what I don't want to have is a situation where we have a client that falls in love with a home, and then we quickly realize that asking a seller to cover their closing costs ain't going to happen. And then now we're scrambling to figure out how they can make this deal work. I'd rather do the legwork on the front end to say, hey, we verified you have these funds. Hopefully you won't need to use them. Right. But we can quickly pivot to something if they really love a house. So those are kind of that's some of the stuff that I love the most about what I do, is the strategy and talking to and game planning with the client and the real estate agent on the most effective way to put them in a position to win.
Sure. So, closing can be a scary activity as well.
Sure.
Especially for the buyer and a first-time buyer who's never been through it before. Yeah. Do you walk alongside them in that activity?
Yeah, absolutely. And it doesn't just have to be a first-time home buyer. Anyone that's, sometimes maybe you'll have someone that said, yeah, I did this with my parents helped me the last time. Now I'm doing it on my own and I need, more hand holding. I really get a feel from that in the initial conversation on who needs the little added care for things. At the end of the process, I mean, we certainly shepherd them all the way through, but at the end of the process, with every client, I walk them through the numbers line by line.
Okay.
And explain to them, how we all kind of reach that. Because a lot of times there's so many numbers in the beginning,
right,
that, certainly we'll dive in if the client really wants to. But I think a lot of the stuff is like, I just got a contract, I got to do a home inspection. All these different things are going on. It's more like your payment's going to be this. Here's the money you need for closing. But now that the dust is settled a little bit and we're getting into into the final steps, going through the final closing disclosure with the client is I do that myself with every client.
Okay.
And make sure that they're comfortable and understanding. Like I found that explaining how escrows work for taxes and insurance are, I have a really good approach on how to explain that. I had a client tell me maybe last month that we had closing. She had bought a home before and had owned a home, and I think she was buying with her partner, and I was explaining it, and she said, I've bought a home, I've owned a home, I've made a mortgage payment before. No one's ever explained to me how escrows work. And she's like, thank you so much for doing that. And I think just taking a little bit of extra time at that point leads to, a little bit less confusion for the client at the end of the day.
Well, sometimes it's the simplest stuff that people miss.
Yeah. Because we do it every day. Like And you take for granted that, well, of course everyone knows this, right? No, they don't. Right. I mean, just like I don't know. I'm an expert. I always talk about I'm really in my life. I work with experts on everything, and I'm an expert in very little things. Mortgages is one of them. Mechanic. I have a mechanic and a plumber. Right. I work with experts on everything, and that's the area where I can be your expert.
Sure. Is there a situation that comes to mind that is really one that turned out, maybe didn't look good at first, but turned out good?
Yeah, I had a really, one of the things that's really, the industry's moving towards a little bit more is some more back to some of the non-traditional lending programs. You've got the conventional, the FHA, the VA, those kinds of programs. But when the real estate bubble happened in the 2008, 2009, 2010, there were a lot of programs out there that kind of didn't go well. No docs, stated income, those type of mortgages where there were very little questions were asked of clients. Those kind of programs have come back in a much more responsible manner where we're validating things, but these are for clients that don't fall in the traditional box. So I had a client this past week who's purchasing a home and putting a large down payment down. House, I think the price was around $2 million, financing $1 million, but they didn't have employment. They had a ton of assets, over $4 million in assets, but under traditional mortgage programs, they wouldn't have had a mortgage. But we have a program, a suite of programs under our rate portfolio program. I had an asset-based lending program. Boom. And the mortgage rates, you would think in these cases, the rates would be a little bit higher than what you would traditionally get based on their profile. They got the same rate that they would get if we were verifying their income traditionally. Wow. So, I mean, I think it's nice to see more and more of these programs that we can now get clients into homes that weren't able to get homes before.
Okay. Because their situation might be a little different than what is thought of as the norm.
Yeah.
So you guys can work with that.
Yeah. I mean, it's not, listen, these programs are much different than, like I said, the old programs were. I mean, the old programs in the early 2000s when it really went sideways. I mean, the credit criteria was not good. They were subprime mortgages. These programs out there now that are non-traditional require really good credit. You got to, it starts there. You have to have really good credit. And then it's based off of something. It's this asset-based program I talked about. There are mortgages for self-employed folks. Maybe they don't show enough money. They write off a lot of business expenses, as small business owners tend to do. They'd rather pay less taxes than more taxes. That's tougher to fit into a box that the traditional lending programs require. we've got a program. It's called a 12-month business bank statement program, where we look at their business bank statements. We look at deposits that are into that account. We do an income calculation off of that. To me, that's outside the box thinking, but we're not just closing our eyes saying, oh, okay, what's the income number? We're basing it off of something. They're really well qualified, good credit buyers. We can do that. I mean, we also have a investor program that's really, really popular. It's called our DSCR mortgages. That's a debt service cover ratio mortgage. Fancy words for basically, we're looking at the deal itself. It's an investor buying an investment property. If the rents that are expected on this property cover the mortgage, you qualify. That's it. We just want, as long as that happens, that and that's makes sense kind of lending, right? I mean, if the rents are going to cover the mortgage, that's what we're worried about, you know. That's and we don't need to dig into tax returns and other things that are really unrelated to the deal itself. So once again, got to have really good credit. Sure. You know, in those scenarios, you know, and that's the first thing that we're really looking at.
Yeah, because you want to know that they're going to use the assets as they exist from a revenue perspective to pay the debt.
Yeah. It's just got to make sense. And so a lot more makes sense lending and more of that's expanding. But like I said, in I believe a very responsible way that didn't exist in the early 2000s.
Yeah. Well, is there anything else you'd like to talk about? We're at about 20 minutes.
Okay. And I mean, I think I would, maybe just talk about the question that I get asked almost every day, David, is, what do I think is going to happen with mortgage rates?
Right.
When are they coming down?
Yeah.
And what's going to happen to the housing market? Because I often get a lot of times it's, hey, Pat, I think I'd like to buy a home, but I think I'm going to wait for rates to come down.
Well, maybe waiting forever.
Yeah. I mean, there's two things. Number one, we don't know when they're going to come down. We have ideas and I can share that, what I think is maybe going to happen with rates. But the other part of it is the simple question I ask is, okay, well, when rates come down, what do you think is going to happen to home prices? Right. And, there's very low inventory in the DC area. So where I predominantly work in. And that's why even though rates reached, 23, 24-year highs over the last couple of years, every year home prices continue to go up. Right. Yeah. So it's not a rate thing. Right. But as rates drop, more buyers that were on the sidelines that were just like the person who was asking me, I'm going to wait for rates to come down, are entering the market. There's also other buyers who couldn't qualify with where the rates were. They're now into the market. And there's no way, in my opinion, that the DC area inventory is going to match the new people that are entering the market. So if you wait for rates to come down to buy, by the time you do buy, you're going to have a lot more competition. And that means what we saw during the last few years, multiple offers, probably going to have to make an offer above list. Mm-hmm. You may not get all the contingencies that you'd like to have. That means maybe not an appraisal contingency. Maybe you don't even get a home inspection, which I hate my clients not to have a home inspection. And ultimately, even though you're getting that lower interest rate, the house got bid up so much, your payment is higher than it would have been at the rate there. Yeah. My clients that have bought during this environment, guess what they're going to do when rates drop? They're just going to refinance.
Sure.
And because the home values went up, they've got equity that, maybe they had PMI when they, didn't put 20% down when they bought. Maybe they're going to be able to remove PMI with the lower rate. So I think, my feeling is that it's an immense buying opportunity right now. And you got to be ready. It's not run and buy if you're not financially ready to do it. But that's kind of my feeling on the market. Now, as far as mortgage rates go, recently we've seen rates come down a little bit. There was some weakness in the job numbers that came out, but there's still a huge push and pull with the Federal Reserve, Jerome Powell and President Trump. And I'm not going to get political at all. It's not a good idea, but there's certainly, obviously we can see it in there right now. They're holding pretty firm. The Federal Reserve, that is holding pretty firm in not cutting rates, although the expectation we will see a rate cut in September. And in fact, the market is now. That's what the other thing I talk a lot about is that the market's already pricing in these rate cuts. So I hear people say, well, I'll wait till September because the Fed's going to cut rates, and I'm like, well, that already happened. That's why the rates came down.
In the mind, it's already there.
Exactly. In fact, if they didn't cut the rates would probably go up. Right. So it's more about what the Fed says and what the future plans are. But Jerome Powell's, who's the Fed president of the Federal Reserve, his term ends in May of next year. So there's already candidates for replacing him. Certainly, you'd expect a very rate cut friendly president. Now, that doesn't mean that person doesn't make. There's still a vote of multiple people, but they do have a lot of sway. I say that all to say I do feel like we may see rates come down next year. I don't know what that means, as far as that goes. But ultimately, if you're thinking about buying and you're waiting for the rates to come down, I don't agree with that strategy.
Well, I don't think it really has a material impact, especially as the market changes in general, like you were saying. Mm-hmm. About the price and the supply and demand, all that affects it as well. It's not just the rate.
Yeah, no, you're right. Yeah, it's just fuel to the fire. I always talked about that. The reason that during COVID, that home prices nationally were going up 16, 17, 18% per year, it went up. The rates were fuel in the fire. I mean, The rates made it go even more bonkers, but it was going to go up. I mean, there's just no inventory, and now we have this whole they call this lock-in effect, where you have a lot of homeowners that have mortgage rates below 3%, and they're having a hard time. And that's a huge part of the issue with inventory, is that even if they really want to get more space or downside or whatever they'd like to do and move on, they can't justify it because their mortgage rates and payment is so much lower. Hopefully we see really what needs to happen, I believe, is we need to get rates low enough. They're not going to go to sub 3%, but can we get something that's a little bit closer to where those folks are that are not selling, that finally says, okay, I know we had another kid in between that. We need more space, or whatever they want, whatever next in their life that they wanted to do that they've been holding off doing. If rates can get close enough to that, I think gives us some more inventory, and that it leads to a more balanced market, because that's what, I like that for my buyers. I don't like the extreme, got to make the decision now and you got to, offer your firstborn to win the offer. I'd rather a more balanced market, and to get the more balanced market, you need more inventory.
Right. For sure. Just makes sense.
Yep.
So, anything else we ought to talk about, or are we good?
I think we're good. I think I really appreciate you having me on, and just anyone watching here, reach out if you have any questions. I have a really big approach where it's there's not a pressure sales thing here. We'll talk about what your scenario is. Like I said, I listen. Right. Find out what your goals are, and then we'll try to figure out a way to help from a mortgage perspective you reach those goals.
Well, and that's the deal. You want to help.
Yeah.
You don't want to sell them. You just want to help.
Absolutely.
Yeah, that's great. All right. Thanks for your time. Enjoy.
Thanks, David. Thanks for having me.
All right. Great.